They may say, no, this is not a very fantastic investment opportunity. Why? Because the company's ROE over a 12-month trailing period is about 12%. Hi, good morning, and welcome to Finance Boulevard. Good to have you here, and thanks for coming back to this channel. For those who are coming for the first time, I appreciate you, and those who are returning, great. Good to have you. Thank you so much for your support. This morning, I thought I should share just additional details on finance on Aradel. Aradel is a company I spoke about yesterday that got listed by introduction to the main board of the Nigerian Stock Exchange. That's the Nigerian Exchange Group. Well, it appeared that my story yesterday or the content yesterday was largely so positive. So I thought, well, there are a few things that people need to know that may or may not happen, right? Maybe you should be aware of. So just understand that, this is not a paid ad, and I don't speak for anyone. I just talk about things that the way I see them. As we speak this morning, you're going to see a few things that you need to be aware of, particularly for those who are offshores who want to do some investment in Nigeria. Well, could we say that everything is all positive for the company? Not exactly. There are a few things that people need to know, be aware of. And one of those things is to say that, yes, while the company had delivered some stellar results quite recently, for those who are very, very particular around certain investment metrics, those who are actually focused on, for example, the metrics such as return on equity, they may say, no, this is not a very fantastic investment opportunity. Why? Because the company's ROE over a 12-month trailing period is about 12%. How did we arrive at that number? Now, if you take the 12 months results for FY23 and add it to the 6-month result for FY24 for H124, and then remove the 6-month result for H123, you will land at a PAT of about 145 billion naira. 145 billion naira, great. Now, depending on how you decide to take your denominator, but let's assume that your denominator is just using the base, which the current equity, which is about 1.2 trillion naira. So the company has a 1.2 trillion naira equity shareholders fund as at June 2024. So if you take 145 billion and divide by 1.2 trillion, you will arrive at 12%. So effectively, the return on equity of this company is 12%. The question is it good or bad? Many people say that, for you to consider ROE to be reasonable, it should be somewhere in the north of 20%. So 20% or above. For those who really use that screening mechanism, or that you have that as a metric for screening, this may not be an interesting opportunity for them because they will be like, this does not offer me what I want. But anyways, so it depends. Metrics can actually be good or bad for certain people. So it depends on what you're looking for in the market. If you're looking at maybe for someone who's pretty much interested around maybe setting sort kind of metrics, then this is something to consider. So this may not be one for you. But for those who probably are looking at future growth potentials, maybe price increases arising from appreciation. Of course, there's no giving it, because things can also go south. There are general investment risks, right, that exists with any company, particularly those operating in certain geographies, such as Nigeria. So you need to be aware of that. So that's the first one. Now, the second one is to say, hey, this company operates in Nigeria. So to what extent am I protected from the FX risk? Well, FX risk is a very critical thing to consider if you're considering investing in Nigeria. Whether it's FDI or FPI investment, whatever thing you want to do, you need to consider critically the FX risk. At the moment, I think the USD goes for about 1,700 naira per USD or to a USD to a dollar, which is huge. However, The question is, to what extent does it impact this company? It appears, while that FX risk is there, one thing I've come to understand is that this company appears to have a very nice blend of USD revenue and local revenue. For example, about 60 something percent, about 64% of its revenue comes from the sale of crude. Of the and this is based on the H1 result, H1 24 results. I think over 170 billion of the 268 billion billionaire revenue that they generated in H1 21, H1 24 was from the sale of crude. So in effect, we're saying that if you have 64% or 63 point something percent of your revenue coming from the sale of crude, which of course we all know is denominated in USD, then it means that you have some level of hedge. And I'm not sure what proportion of that amount is sold directly to their refinery. But if, for instance, you think about it, the refinery business is just generating about 30% of their revenue. So in effect, it means that the refinery business is not really the cash cow. So I mean, we can iterate to say, hey, to what extent? And probably you can come to somewhere around maybe 30% or so, maybe between the band of 30 and 45% of their crude being sold to within the group, right? So it means that you still have somewhere around 55 to 70% of the crude being sold externally, which gives them good FX FX cushion. But again, you need to really consider that. So 30% of revenue comes from the sale of refined products, which is whatever they refine, which most likely is sold to some extent probably locally and some others internationally. I'm not sure what the bifurcation is, but when you think about it from that perspective, you see that if you have that huge volume of of sales coming from crude, then you have some FX protection. But of course, to the extent that FX continues to be a challenge for the Nigerian market, it's something that everybody and anybody needs to pay attention to. One other thing is just to also pay attention to price volatility, right? Because this company operates within the oil and gas space, so the impact of global, oil production, the wars in Middle East, and probably anything happening around the world can also impact it. So it's one additional risk that needs to be borne in mind. Anybody needs to bear in mind, because yes, you can say, hey, some of these external shocks or external risks have some positive impact on the company, because as for instance, you start seeing maybe some of these events in the Middle East. The impact is that crude price will go up, right? Which you would say, hey, it's for the benefit of the company. But what if all of these things also die down, or some other maybe external shocks come into play? Maybe there is another pandemic or any incident that can drag the price of crude down. Now, to the extent that the company continues to have a huge proportion of its revenue coming from crude, that could be a huge impact. So it's something to bear in mind. Now, are there other things we need to also consider? Surely, yes. I think you may also be wondering, so to what extent, I talked about the gross margin yesterday to say it's somewhere in the north of 60%, which is huge and superb, right? Now, what proportion of, how do you, many people talk about Nigerian production, crude oil production in Nigeria, and they say that it's very, very costly. And it appears to be so, and rightly so. So I try to say, hey, so how much does this cost this company to produce every single barrel of crude? Well, I'm not sure exactly, but when I looked at the 2023 results, what I saw is that the crude business was delivering as much as 62% gross margin. 62% gross margin in FY23. Now, If I try to use that number to extrapolate to say how much does this cost this company to produce crude in H124, I come to about $33 to a barrel. So it means that the cost of extracting, crude is about $33 to a barrel as at H124. Now, what does it really mean? It means that to the extent that crude continues to be high, the company will continue to deliver good margins. However, if crude oil price drags down, the question is when will it get to the point that this company will start having problems around, will start having problems around um, um, margins. Let's assume that maybe at the moment, I think it appears crude price is around 75 to 77 dollars, right? Now, that the implication is that at this point, the company's gross margin has probably would drag down, right, to somewhere around maybe 57, 55 to 58%. But it's still very nice, right? So you expect that this company will start having huge issues when crude price drags a lot more down, right? Maybe if there's a continued drag downward pull of the crude oil price. But at $33 per barrel, I think many people say that it costs about $48 to produce to extract crude from for crude production. But yeah, $33 appears to be a nice place, for all of the costs involved in production of and delivery of crude for this company, which is pretty nice. So, but it's a very important risk that anybody needs to pay attention. So, if margins start to drag down, then that means that it can actually have some impacts, in terms of how much the company is able to deliver in profitability, and those who want to measure EBITDA and stuff like that, right? Now, other things that probably needs to be paid attention to, particularly for a market like Nigeria, is political and regulatory risk. I think it's even more important than all of the other risks I've talked about, right? Political risk is huge for Nigeria because the challenge is that most times one political group or maybe political party gets into power and they decide to change certain existing laws that may not be so favorable to a player. So our regulation can actually change quite often. And I think there's need for anybody who is looking at in this company to, and I mean the market generally, to pay attention to, the political events, the political decisions, and regulatory changes that are happening within the market. Yeah, so these are some of the things I think are worth talking about. Or of course, there are other general market risk, right? For example, I mean, there are certain times when you see that markets are all just moving upwards, and all of a sudden things just keep crashing. Yeah, so that can actually be a bit of a concern to people. But again, so for the most part, if you notice, you see that most of the things I've talked about are largely systemic. Uh, Yes, there could also be some other risk around maybe risk of management, maybe management risk, right? But from people I've spoken to, it appears the company actually has very good management team. But, I mean, I don't speak for them, so I think you can look at their financials and try to figure out who are the core members of management and maybe look at their profile and see what you can say about them. But I mean, there are many things to talk about. There are many things to think about when you want to invest in any company. I will always say, please don't forget to speak to your advisor. This is not an investment advice. This is just sharing my view around what's going on in the market. I hope you enjoy this one. I hope we're going to talk about something more later. Thank you so much, guys, and please keep coming. And please don't forget, subscribe. Thank you so much. Appreciate it. Cheers.